And away we go. Good morning, everybody. Wall Street Jesus Saturday Sweep Series. Hello again to everybody, non-members, those of you who follow on social media and so forth. And a lot of members on here. We have a Saturday webinar every Saturday. So good morning to you guys as well. A lot of interesting stuff to go over today. And, in this market, I think every one of these Saturday webinars I find interest in because there's a lot of moving around. Things change quickly, flow, sentiment. So that's exciting, even though it could add some difficulty to trading. You got something different to look forward to. No 2 days are the same. No week is the same. Where bullish trends can kind of get boring, even though you're making money. But before we dive into all the good stuff, for those of you who are new to the webinar or aren't members, you could go to wallstreetjesus.com. Any questions you have about whatever we discussed here on the webinar, the likelihood is you're going to find it on here. You click on the strategy section, quick, easy to read blogs, very easy reads. And how to use this stuff, learn a little bit about some of the tools we use on a day-to-day basis. Religiously on private Twitter in the Steam Room. Okay. And for anybody who's a new sign up, again, private Twitter or the Steam Room, you guys should check it out as well. All right. It will shorten the learning curve by a little bit. So again, strategy section at wallstreetjesus.com. All right. And if you have an interest in checking things out, we have a 3-day trial free, no credit card required, so no obligation. All right. And you get access to the Steam Room, which is this live trading room. Again, flow. I'm on live audio, video throughout the day, discussing flow as it comes in. You got traders trading around it. The whole 9 yards. Okay. And then if you are interested in what you see, you could find some other subscription packages there. If you're interested in just private Twitter, you got to go to the product section here is probably the easiest way. And then that private Twitter feed tab. All right. And for $59.99 a month, you get access to private Twitter. What else did I have? Oh, and if you subscribe to the premium package, private Twitter is included in it, which is comes in handy, useful tool. Okay. So like I said, if you have any questions, you can hit myself up on Twitter. You guys know where to find me. All right, let's get into, and this is something I've been doing with members. Andrew, good question. The difference, there's a big difference between the room and private Twitter. The room, I'm on live audio, video, and talking about the flow, discussing the flow as it comes in, sharing what I may be playing, what I may be swinging, what's worth a swing, that stuff. You got traders in the room, you get Lucci's in the room, a lot of other traders we've introduced to you guys on some of the webinars. Professional traders that trade around the flow. So if you're trying to build a strategy, if you're at that point in your career where you're still trying to develop a strategy, you want to learn some new things, I think the room initially is probably your best bet. If you have already a strategy in place and you pretty much know what you're looking for, that's where I guess you'd be good with private Twitter. All right. And, private Twitter has its use as well. That's why we included it in the premium package with the premium membership with access to the room. All the flow is the same. All right. All the flow is same in real time. You get some commentary on the private Twitter. You get sentiment updates, open interest updates. Again, the main difference is the audio video feature and other traders trading around you. Okay, so that's the main difference. But I'm glad you asked that. I should have hit on that because I get that question a lot after the fact. All right, so this is something I've been doing now to keep me on the right path for members. Every Saturday we have a webinar just like this, by the way. And I like to write a little itinerary because when I start talking markets, I can, sometimes I forget what I really wanted to say and some important points. And, I can ramble. That's what happens when I talk stocks. But this is basically an outline of where the path I want to stay on today. All right. So this is how we start off every webinar. We're going to review the setup coming out of last Saturday's webinar, what we were looking for, what signals were showing then, what played out in price action. Okay. And, where we are now. Then we'll dive into a sentiment rundown of the current readings on all our retail sentiment stuff we look at, okay, on a day-to-day, week-to-week basis. Again, the difference between the short and intermediate term, because you can't look at all these things the same. Sometimes they all line up, and that's even better, and that's kind of where we're getting close to right now. So that's a good thing. All right. Then we'll kind of come up with a game plan. A lot of times the game plan stays the same. What's the playbook in this market? What's the easy trade if there is one? What's the difficult trade to stay away from? Because there's usually a lot of those. Okay, so we talk a little game plan. Then Q&A on, first of all, any questions you guys have, just do me a favor, and I left it for last here. You can see on the bottom. Just save it for at the end of each and every topic, because if you're throwing them at me as I'm going through stuff, I'm not going to see it, and I'm just going to miss the question. Okay, so any question, comments, I'll look to see what you guys are talking about at the end of each and every topic here, because I like to try to get to all your questions. That's what this webinar is all about. All right, and then we'll get into a discussion on the recent flow. This has been an issue for us for a long time. We get a week here and there where there's been some decent flow to talk about, but a lot of times we're not even hitting on any individual names. We're just talking about the overall flow and what to look for and what we've been seeing. That's how bad sweeper activity has been since the summer. Again, some rare burst here and there, which allowed us to play for a squeeze, but overall, just not impressed. Nobody showing any confidence out there. And late last week, we started to see some early signs of that possibly changing. Okay, so there's some names we can talk about, and I'll tell you what I mean by that. So we can actually dive into this feature here, a discussion on recent flow, notable sweepers, what to look for, names maybe to look for continuation sweeper activity in the coming week and stuff like that. All right. So let's get into this. We'll go right into the market into last week. By the way, because I'll never remember this. You guys know I wouldn't buy Bitcoin with your money, but all you Bitcoin fans, I glance at this. Again, I think Bitcoin has been a Ponzi scheme from day one. You guys know that. But for those of you who trade Bitcoin, you have a niner there. So she can't bounce off of this. You're in real trouble, big trouble there. See, niner here, found a way. They showed signs of exhaustion there, had a decent rally. Niner here, a little rally. Niner here, bigger rally. So useful tool to see when sellers may be showing signs of getting tired. There's your Bitcoin analysis for the day. All right. And then I'll see you at zero. Let's see now. Let's get back to, let's go to ES. I think I have that thing on there. All right. So basically, again, last Saturday, I think it was a members only webinar, obviously, but last Saturday, what we were seeing, we had initially here after a huge rally, a powerful squeeze, okay, of some extreme bearish sentiment signals, okay, into these lows. We saw the opposite take place. Okay, so in other words, a lot of the short-term signals that were flashing bearish extreme were now flashing some bullish extreme. Okay, and that's what happens again. You totally normal when you get a squeeze of this sort. Okay, and you could sense it. A lot of times you could just sense it, right? You could sense it off CNBC. The halftime show, one week they're suicidal, the next week they're telling you to buy everything. Okay. If you guys remember, everybody was talking about bear markets and everything else into these lows. What happened? Powerful squeeze. Next thing you know, Santa rally. Oh yeah, Santa rally, without a doubt. And a lot of times, the market will, even if they're right, even if there is going to be a Santa rally, the market rarely is going to make it that obvious where it signs off, some sirens and horns and tells everybody to get aboard and make some easy money. Okay, when that happens, you should be even more worried. Okay, because to me, they're reeling in the riffraff, the retail, when things like that happen. So this worked out perfectly. This is exactly what you would want to see if you were bullish. Okay, we had a nice pull. And again, because of how powerful this rally is, not overdone. This is totally normal here, in my opinion. Okay. And what has happened at the same time, all those bulls that were calling for Santa rally and a continuation of this move higher have been rinsed. Okay. And as a matter of fact, again, you guys who are members know exactly what I'm talking about. So a lot of our short-term indicators into this close here was flashing bullish signals, telling us we may be close to an end and close to a squeeze. Okay, I'll show you guys what I'm talking about. For those of you who aren't members, give you an idea of what I'm talking about. And that's set up perfectly, because a lot of times we like to wait for further weakness and use that. Then we see some sweeper activity, use that to buy some stuff. Even trade intraday. A lot of times you don't even have to take the overnight risk like days like this. All right. And we got some weakness the following day, which is a beautiful thing, because a lot of times they'll just gap it up. And we had a big move there yesterday, some selling. Again, turn the market around, red to green. So that's perfect. Okay, that's perfect. So now where we stand right now, and we'll dive into, again, the sentiment rundown. I'll show you the details. We lost those bullish signals of this day here. Okay, so we're not technically flashing bearish extreme signals, which if you look at it in the contrarian way, it would be bullish. But we're not too far away. Okay, we're nowhere near overheated. We're below neutral. Okay, so what that tells me is that we should be looking towards weakness as an opportunity again. All right. Again, I'll get into the details of all that. That's the next step here. I'm just giving you an idea of where we were at the start of last week and where we are now. Okay. So going into last week, if you guys remember, it was a tough setup because we had sentiment against us. Then towards the end of this week, we had sentiment get behind us again. And another good sign, some signs of sweeper activity, okay, which has been rare. So we'll see how that plays out. Okay, so that's basically where we come from. And you can see, we were talking about on prior webinars, just on price action. You guys know I'm not a technician or anything like that. But, a lot of times when you get into a corrective phase, people think automatically, instantly, it's just going to be some Armageddon phase that we go into, where things just bleed to death, just go down every day, and it's easy money on the short side. And that doesn't happen. That's a dinosaur. That's rare. That's 2008 for a stretch. Okay, so the majority of times, Okay, even in the worst bear markets, this is the price action you see. Choppiness, volatility, right? Downtrend where there's lower highs. Okay, and we won't know if we're out of this until we are. You know, we may see signs, as we discussed, of the flow really starting to accelerate, some quality picking up. You know, we may see some early signs of that before, you know, the real breakout takes place per se. You may see it in the price action, right? Names start to look better. We may even just see a major rotation, you know, where the market is stuck in some lengthy downtrend, but there are sectors under the hood outperforming and doing quite well. I keep going back. I tell you guys about the Nasdaq bubble that bursted in 2000. You know, everybody talks about that as that being, you know, a devastating crash. Yeah, if you were in tech, you know, if you were in small caps or a bunch of other things that were actually breaking out and in uptrends, it could have been a very profitable time. So that's where, you know, you, no matter what, you don't want to get too bearish. You want to keep your eyes open. You want to see what they're buying. You want to see what's looking better than others. So this way you don't miss things like that. All right. But this is totally normal here in a corrective phase. And, you know, we're going to see whether we end up holding these lows here, forming some sort of uptrend, maybe a sustainable uptrend into year's end, right? Or, you know, these rallies end up failing, we roll over, and we make a new low. But then again, like I said, there's probably going to be a squeeze of some sort that we can look to take advantage of. All right, so this is totally normal stuff. Totally normal. All right, let's get into the sentiment stuff so you can see how things are shaping up. Because that, to me, is the roadmap to how these things are going to shake up. All right, here we go. You guys know the squeezometer. All right, that is the most extreme short-term indicator that I follow closely. Okay, it's an intraday indicator, very similar to a put to call, but it's more defined. Okay, it's not just measuring volume, but it gives us an idea when a lot of the retail crowd's leaning on one side more than the other, calls, puts, right? So basically, we had a low squeezometer, and we are still, you know, still under neutral is what we call it. 50 would be neutral. Let's say we are under neutral. Any little bit of weakness, this thing would be favorable. Okay, but again, this is more extreme short-term intraday stuff like that. We like to use it for entries, looking for entries. You know, if the squeezometer is up in the mid 60s, which it was actually just recently here. I think it did. Oh no, when was it? Friday. One of these days into the highs. Oh, Friday into the highs. The squeezometer actually got really hot, so it told us, you know, even on an intraday scale, as day traders, to just chill out a little bit. Let me go to 5 minutes. I'll show you what I'm talking about. Just want to give you guys an idea of what it measures. All right. So if you remember, we had that squeeze. I think it was over here. I think it was maybe off the buy program, one of these highs, and the squeezometer got up into the mid 60s. So our reading of that is to sit tight, market fade, some chop up some bulls, and we'll likely get a better entry if we're looking for an entry. All right, so it ended up closing around neutral, so that's totally fine. Okay, that's extreme short term. This ST trader sentiment is more of, it's an end of day reading. Okay, so it's not necessarily intermediate term in my opinion, but not as short term or intraday as the squeezometer. A lot of us who swing will use this for short term trades, meaning weeks, maybe month or two, no longer than that. This was the one we had a buy signal on. Oh, sorry about that, guys. We had a buy signal on this day here, okay, into the close. So it allowed us to lean bullish into this weakness the next day for an entry. All right, and that's the same indicator that was flashing overheated signs at the top here. All right, so that's our go-to end of the day sentiment indicator. All right, then we got that measures the Nasdaq. You can see it's leaning a little more bullish than the overall market because Nasdaq names have been destroyed. Okay, so that's really close. That's an intraday. You don't really need to know about that. Nova Ursa. A lot of you guys may know that already. I don't think I have a screenshot of it. I should have. But Nova Ursa is that Ridex funds positioning. This is a short-term version of it. Works well with the other indicators we're looking at. And again, if you're not a member, these names might sound foreign to you, and you're not going to know what they are. Basically, you're more interested in what the readings are right now. If you're members, you know exactly what I'm talking about. Okay, so the Nova Ursa was screaming buy signal, into the recent lows, pretty much around neutral, but she can move. So again, any little weakness would set up a buy signal there. So here's the conclusion of this. Okay, which will make it easier for some of you who aren't aware of what these things are. All right, this measures the short term. Okay, so what we're looking at, what my interpretation of that is any weakness, we would want to be leaning bullish. Okay, any weakness here, let's say early, we go into the week, Monday, Tuesday, we have some selling or whatever the case. If you are a member and you follow this stuff and you're paying attention to this stuff, and that's why you're a member, you do not want to be shorting into that. Okay, that's not the time to be looking for shorts. It's the time to be looking for long entries if you're interested in that. Okay, again, a lot of times people think, oh, buy, sell signal. You don't have to necessarily buy when these signals are signaling bullish. But the most important thing you should be taking away is not shorting into bullish signals. And it's going to save your rear end a lot of money. Okay, so that's my interpretation of the whole can of worms here. Early next week, any weakness from this point, in my opinion, should be looked at as a long opportunity. Okay, even more so, I'll tell you why. Because a lot of these intermediate term indicators, okay, are at readings that I've seen at major bottoms, okay, at major bottoms. And again, you guys who are members and gals who are members know exactly what I'm talking about. What happened was, what the hell did I leave up here? Oh, what happened was, into this final wash, okay, the short-term indicators were all flashing bearish extreme, which our interpretation, that would be bullish. I know it could get confusing, okay? So this final wash here, all the short-term indicators were flashing. We should be looking for long entries for a high probability squeeze. But in addition to that, all these intermediate term indicators that I haven't looked at in so long because we haven't had a correction, weekly indicators, they update once a week. They're just longer term readings on sentiment than a lot of the stuff we look at on a day-to-day basis. All of those were flashing bullish signals into these lows. And for me, a lot of you know, I've been in this game since 1997. Every single major low in the market, every bottom, I've seen all those indicators flash bullish signals. Every single one. Okay, so when we see all that, as bearish as the noise may be around us, okay, whatever strategy it may be that, you know what, even though these signals aren't, I'm saying this could be your interpretation of it, even though these signals are flashing bullish, I still can't get myself to swing some stuff, so I'm going to lean to the long side, but I'm going to actively day trade and look for a squeeze. Okay, less risk. You don't have to worry about overnight. A lot of people worry about that overnight. Gap down, crash. All right. Intraday, you can put stops. You can decide to stay looser, right? So you can manage your risk a little better. Whatever it may be, that's something you got to figure out on your end and what you feel comfortable with. When we see that stuff line up, you want to be positioned to take advantage of a squeeze. And a lot of times, like I said, this has been at major bottoms that I've been a part of, okay? Even in the worst of markets that I've been in, and by far 2008 was the worst bear market I've ever been in since 97. And that's including the 1998 Asian contagion, which was pretty vicious, all right? But 2008 was Armageddon. Even in the worst of environments, when these things flashed extreme signals, there was a powerful rally before the market rolled over and went to lows. And if you guys are members, you remember we actually were looking at charts back in the worst markets back in time and how the market reacted when certain signals went off. All right, so that's why, this stuff has worked throughout. I mean, it's not magic. Okay, the market moves off sentiment. And the logic, if you guys are trying to figure out the logic behind it, the logic is if everybody is so bearish, if everybody's selling, if everybody's shorting, if everybody's all lathered up in protection already, okay, what's the chances this market is going to roll over and crash from there, and all that public money, all that riffraff money is going to get paid? Right? That's the logic. Just like we were talking, Bitcoin. I keep bringing up that example. What was the logic that the 3 kids riding a skateboard at 18 years old outside my house every day rob their mother's money and put it in Bitcoin? What was the logic? All those guys were going to get rich, off Bitcoin. It's not going to happen. The whole world's going to get rich off Bitcoin, and Warren Buffett's going to sit there and miss the opportunity. Can you picture that happening? All right, so the market, evolves around sentiment, right? You hear Lucci, guys like Lucci, who've been playing the game, talk about emotions and psychology. That's what this market evolves around. All right, so that's the logic there. And, you hear that saying a lot. If everybody already sold, there's no sellers left for that rollover, then any positive news, you're going to get that scrambled to buy. And that's what happened here. I don't even remember what the news was. What was the news that created this? I have no idea. I try not to pay attention to it. Okay, but in my opinion, it was just a powerful squeeze off major bearish sentiment. Okay, so getting to, again, that's the past, getting to where we are now. We're at a point here where any further weakness, okay, maybe we come down to here and test lows or whatever the case may be. But at that point, I get lost. At that point, we're going to have all these things, every single one of these things, flashing green. And I already told you the past experience and the track record I got with my own 2 eyes with all this stuff, flashing green. Okay, now these are the intermediate indicators. The put to call, we haven't seen that panic I know a lot of people are talking about that. We haven't seen that panic in the put to call that we a lot of times we'll see at major bottoms, but not necessarily before squeezes. Sometimes it's just elevated before squeezes. But the equity put to call has been elevated throughout here, throughout. I mean, we closed Friday off a 2-day squeeze at 0.74. So any weakness, that's in green territory already. The daily sentiment index, I posted on Twitter. A lot of you guys see the DSI, the NDSI. The DSI, I think the NDSI, which is the Nasdaq, was at a level I haven't seen in a long time. Single digits percentage bulls. Now it's bounced a little off the recent rally. Okay. But again, any further weakness, where are these things going to end up? Right? All this, the smart money, dumb money indicators, all flashing bullish signs. You guys know I love the retail put buying and retail put the calls, all bullish signs. Here's an interesting one you guys may know. You guys ever hear of this one? The National Association of, what is it again? I forgot what it stands for. You guys probably know it. It's very popular. But the problem is, you never get a buy signal out of this thing. You're going to be in a major correction to get a buy signal out of this. Anybody hear that? The NA, I think it's, I might have spelled it wrong. You heard it, Maria? Yeah, you guys could Google it. I think you can grab the indicator. I should have done it. You guys could grab the indicator, National Associations of Active Investment Managers. That's it, Maria. National Association of Active Investment Managers. And, a lot of people look at it. A lot of players in the business look at it. But the problem is, and you don't really want to look at it as a sell signal unless you're up at sustained high levels, because that thing could be elevated. Again, in bull markets and bull trends, these things can remain elevated for a while. But, when they show panic, they show panic. It's rare. It's not quite there yet, but it's getting close. And it hasn't been there in a while. It hasn't been there in a while. So that's an extremely bullish sign. Ridex, all these Ridex fund positioning, intermediate term, all bullish as shit. Excuse my French. I never seen them this bullish in a while. All bullish. These guys want no part of stocks right now. Nothing. AIM, again, a lot of you guys know that. Very popular indicator. Again, the problem is it doesn't get there enough for us degenerates. That's bullish. Deep is saying I backtested AIM over a 2-year period. When it gets to 0.2, SPX is higher 4 weeks, 100% of the time. Yeah, the AIM, well, you're looking over the last couple of years. Again, Deep, trust me, I've seen it with my own eyes, so you don't need to persuade me. But the AIM has been money. You could even go further back. The couple of times where AIM was in bull zone, okay, telling us that they were too bearish. Though there was a couple times in 2008 where there was a squeeze, like I said, but then the market rolled over and made a new low. So here's what happened. This is what I'm telling you, okay? This is what I'm telling you a lot of times is the worst case scenario. Again, if you're members, this is a repeat because we went over this, but it's good to talk about this stuff, okay? So in other words, what I'm telling you a lot of times was the worst case scenario. Down here, AIM and those reliable indicators were all flashing. We should lean long, right? And in the worst markets, bear markets out there, corrections, there was a squeeze, okay? And then AIM bounced out of the bull zone, right? And then the market did this and went back to new lows, okay? But there was still this before that happened. So that's what, I get trolled on Twitter. I don't even look at the mentions on Twitter. I apologize to some of you I actually like and have had a relationship on Twitter. I don't even, Twitter, I've had bad taste in my mouth for a bit. But I get trolled on Twitter when I talk about this stuff because a lot of people look at that and they say to themselves, oh, yeah, the indicator flashed green, the market's at new lows. I'm not saying we could be in the worst bear market since the Great Depression. I have no idea. What I'm saying is when everybody is leaning on one side of the boat and that's bearish, you're going to have something like this before that market rolls over and crashes. That's the point I'm trying to make. Okay? There is a higher probability that when you have a lot of those intermediate indicators line up, that these could be, this could be an intermediate low, right? And if you look through history, those intermediate lows have been the start of some major rallies, major bull markets. That is not a guarantee to happen here, but there's a higher probability of that happening. And that's what this game is all about. Probabilities. Okay? But the highest probability, the best odds out there, is you get a more than profitable squeeze out of the equation. All right? And again, on the flip side, even if you're saying, I'm going to size down and I'm going to take it nice and easy, because I don't have confidence. I'm not like Jesus. I haven't been watching this for 20 plus years. So I'm going to take baby steps. But at least what you should be doing is when those things are flashing green, if you're shorting into that, you need your head examined. You need your head examined. And if it's the one time that you short into that and you made money, that's the worst case scenario. Because now you are going to continue to do that. And you're going to get annihilated. And that's what I think we're on the verge, what's on the verge of happening right now. I think they're reeling in bears here, and they're going to get effing annihilated. No annihilated? Annihilated. They keep giving them a little taste. Rallies are failing. They're making money on the short side. They're just reeling them in. They're just reeling them in. And think about it. They have to, right? This market's been so bullish where people were giving up the short side. You heard that a lot from a lot of people's mouth. People were giving up the short side. Now what they've been doing is they're giving them a taste on the short side. They're giving them, hey, here you go. Here's a winner on the short side. Have a nice day. Go ahead, you short again? Here you go. There's another profitable trade for you. Until they build up that confidence to really step on the gas pedal on the short side. And there will be bears we never see again in this game. Throughout the course of my career, I've seen a lot of bears knocked out of this game. A lot of bears. I told you guys the Bazooka Joe lows was one of the most recent, 2016. There were a couple of good guys. Great traders too, man. That's the worst part of it all. Great traders. A lot better traders than I am. And they made some decent money on the short side in 2016. They made some decent money on the short side in 2016. Okay? But that was actually the worst thing that happened to them. Because what happened is they got cocky. Okay? They thought every day was a holiday because they were making money on the short side, that it will continue, will never end, because this market is death. And they sized up. And what they do? They sized up into extreme bearish sentiment on the short side. Okay? And then what happened? Then, at the time, similar to now, crude was getting destroyed. There was some OPEC news on crude that crossed Twitter. And people were calling it fake news. Short this rally. Short this gap higher. It's fake news, that OPEC tweet. So they start shorting the rally. Then Bazooka Joe comes in and he starts sweeping up $1 million sweeps. multi-million dollar sweeps, SPY, IWM, Apple, there's Facebook, you name it. What do you think these guys in the room with all that around them, adding to shorts, holding their shorts? This is what happened. This is what happened. It destroyed their lives. It destroyed their lives. And that, see, unless you really know what you're doing and you know how to unwind a position, which is not easy on the short side to do because of that bearish bias just gets the best of you. If, you know, just like I preach to you guys, right? We want to buy weakness when we're bullish. Right? We don't want to buy into the rips. We want to buy weakness. If you're shorting, what are you going to do? You got to short into what? Rips, right? You got to add shorts into rips. What happens? You add shorts into this rip right here. What happens to you? What just happened to you? You got destroyed. Destroyed. And that's what happens. Yeah, exactly, Vince. Margin calls and the rest of it. And again, you know, listen, if you're buying puts, it's easier because you can manage your risk, you know. But the problem is on the put side, this is, again, the market gave them a little taste. Look, this was a nice down move here, guys. Look, okay. So you had this, right? Market bottomed. Oh, double top, head and shoulders, knees and toes, whatever they call it, rolling over. This market paid them nice. They made some decent money here, you know? And then here's your rip. They wanted to short this and go for the gusto here. And that's when it came to an end. And it's no coincidence. I bullshit you not. I'll show you guys this low right here. All those intermediate indicators I just showed you. Green, 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 green. And Bazooka Joe, as we call him, showed up on this day out of all days. This day. He didn't show up anywhere else. The flow is abysmal. Even worse than it is now. There was no call sweeper activity. There was nothing. There was nothing. All you could play with the put side. There was nothing to buy. That's how bad it was. Even this little rally, nothing to buy. And he showed up right there. And the flow exploded ever since that day. Never ended. So, but I'm just giving you an example of how quick these things can come to an end. But the most important takeaway from all this is that even if you think this market is awful, okay, that's fine. But you still got to pay attention to sentiment. And you don't want to be loading up on the put side and shorting into extreme bearish sentiment. You don't want to do that. Like I said, even if it's the one time you get away with it, the market gods gave you a break, they're going to get you even harder the next go around. So it's the worst thing that could happen. All right. But yeah, so that's the point I'm trying to make here. Okay. So I find myself in a little pickle. You guys know, everybody calls me a perma bull. I'm a perma bull. I'm not afraid to, what am I, afraid to admit it? For me, the market goes up a lot more than it goes down. Okay. Early on in my career, I took it to fine tune and master the long side, and then I'll worry about the put side. I came to the conclusion that I don't even need to worry about the put side 20 years later. Okay. Because it allows me to stay disciplined and wait for these type of setups. Okay. So even though I'm a perma bull, again, that's a popular troll word on Twitter, what they call me over the years, I am not buying. You guys know, right? I mean, those of you who are members and been with me long enough know, just because I'm a perma bull, that doesn't mean I'm buying these highs here and I'm getting stupid like that. That just means that I'm willing to stay disciplined and stay patient and allow for that bullish setup to materialize. And I want to be ready to fire when it does. You know, if I'm managing short positions, that's just going to make it even more difficult. Okay, if Bazooka Joe shows up Monday while I'm in puts and, you know, the market is not reacting yet, let's say they're still selling the market, because that can happen. The market's still weak and Bazooka Joe's firing away. What am I going to do? I got to close out my bearish positions and then flip to the bullish side. I can say that now. That's not that easy to do. Not the way I'm wired. All right. So I have my reasons, but everybody's different. Everybody's different. That's why I never preach for, you know, any specific way for anybody to trade. You got to figure out on your own what you're most comfortable with, what you're good at and what you're not good at, and work to get better at on your strengths there. You know what I mean? That's what you got to look to do in this game. But what I will tell you is you need to pay attention to, you know, what sentiment and sweeper activity. Obviously, we didn't even get into that yet, but what sentiment is telling us, because you do not want to be on the side of the boat with all the riffraff. You do not want to be on that side of the boat. The odds are against you. All right, so I find myself in a pickle here, and I'll tell you what my pickle is. What the ideal scenario for me, okay, what I'm looking to do for myself. I want some weakness here. Even if it's not major weakness, you know, you can see we're down 200 on the Dow, then we're green. I want to try to utilize that weakness and figure out some stuff I want to, as far as overnight positions, want to tuck away. Okay. And I feel a little bit better about that now because Flow woke up Thursday, Friday. Nothing extravagant, but they woke up, thank God. There was some cool buying for a change. All right. So hopefully that lasts and I could figure out, you know, what I want to do as far as on the swing side. And, you know, on the intraday side, into any weakness, I'm looking on the board, or for those of you on private Twitter, and I'm looking for any sweeper activity to shift that momentum. Okay. And we had, again, if you're members, you know what I'm talking about, but if you're not, you get a better idea. Like, for example, on Thursday made my whole week. Friday was nowhere near it, but Friday we had, let me go to 5 minutes. All right, so this was Friday. So you get these fades now because of the volatility, and rather than them scaring you, rather than having that concern, you're looking for sweeper activity to come in and shift that momentum and squeeze them. Again, why? Because they're leaning on the put side. So what happens is every time this market, there's some selling there, and this market looks like it's going to roll over, these guys are already positioned for that rollover. So the probability, there's higher odds of a squeeze. All right, and then you get a Trump tweet, boom, boom, boom. Right? So that's on an intraday time frame. That's what I do best. When I'm leaning bullish, when I got sentiment in my corner, every fade, I'm looking at that board. I'm looking for any sort of sweeper activity to create some momentum. And it doesn't even have to be in that name, guys. If a band of sweepers come in, let's say they're buying SPY, Apple, let's say Friday, for example, right? What were they buying? Apple, SPY, what was the other shit? I can't remember what I ate this morning, let alone Friday. But you guys know what I'm talking about. Just to change that momentum, shift that momentum. Give us a heads up that momentum's about to shift. And you could, you're probably even better off in this type of market focusing on maybe ETFs or some names you feel strong about squeezing. Because here's the issue, and we've been talking about this issue, and a lot of you guys are going to have an issue with this too, because the names you guys like to trade are out of favor right now, to say the least. Okay, so you could get a market squeeze, and you could get Facebook going south. So you really gotta be careful there. You gotta pay attention. You gotta try to get an idea if you're playing individual names, what's catching the action as a group out there flow wise, right? So in other words, let's say they're buying the banks and retail, and you see one Apple sweep. If they're out of favor and the momentum's not there, it might not be prudent to play Apple. Maybe Tesla has some juice that day, and you want to play Tesla. So the flow is more important as a gauge on momentum rather than the individual names. On the flip side, you guys know that if they come in sweeping AMD, usually I want to play AMD. I'm not looking for something else to play. But in this market, it's a different type of market. All right. Anybody have any questions before we continue on here? Yeah, Bazooka Joe can afford to be early, but a lot of times, Vince, when there's enough action, they can be early on an intraday basis. Very rarely are they early on a longer term basis than that. In other words, what I mean by that is when they come in and they start tattooing things in size, it's a lot different than somebody out there accumulating size in one name. You understand? That was the difference between Bazooka Joe and some size we're seeing, in XYZ. He was buying everything. And again, we're not the only ones who see that, right? Obviously. So when people start seeing big money like that, aggressive money being put to work, it's a cascade effect. They want to get long. So it's really not, usually it's not too long before you see that tide change. Okay. And it's early signs. Like, for example, I'll give you an example of, again, it's not Bazooka Joe, but I'm just giving you a recent example of some action that was an early indication what Vince is talking about of a possible squeeze coming. I don't know if you guys remember this. Down here, the first aggressive sweeper that really caught our eye, which a lot of you guys who are members played, okay, was that Neil Diamond guy we call, right? DIA. You guys remember that? That was into the teeth of the selling. I remember because I actually tried day trading DIA that morning, had a little pop and did nothing because the market was so miserable. Okay? Because that's all that was being bought. There was just one aggressive sweeper who was buying the living crap out of DIA calls for the following week. All right? But that was our early cue that some money's being put to work here. Somebody out there is looking for a rally next week, and they're starting. Okay? And if you remember, we came in that Monday, and, we saw, no, that wasn't that Monday. That was a Wednesday, I think, whatever the days were. We came in the following day, and then we saw Netflix, some aggressive buying in Netflix, if you remember. That was the morning. And then in the afternoon, that's when it opened up. Amazon, Square, CRM, all caught legitimate sweeper activity. Right? Amazon caught a really good looking bet. So it started with the DIA guy in one name, right? That was the heads up. And that's what Vince is saying. That guy was a little bit early. But then that was the cue, like, to keep our eyes open that a squeeze may be in place. So that's how it sets up with sentiment so well. sentiment was there for us, if you remember. Sentiment was all lined up. And then we saw that DIA guy start to get busy. And I think that's why a lot of you guys in the room, took a shot on that DIA. I even took a shot for a swing. I sold it. What was it, that Monday? I think it was the Monday. Remember a gap up? I sold it, and then the market exploded after that. So, that's the whole other tricky part to this. It's saying, how do you know it isn't just one fund manager taking a flyer knowing he's going to have massive redemptions if he doesn't home run? It could be, Vince. That's why, listen, if you see just one order, it can mean anything. That's why we want to see the whole flow flip. Again, that DIA guy could have been anything. Could have been, somebody just anticipating a squeeze in the industrials and hedging a short. Now, you can make a bullish case for that anyway, right? He was aggressively sweeping, so he was anticipating a short. He was concerned. So that's bullish in the sense on its own. But again, the one batch of action can mean anything. For me, the confirmation was when it started to pour into the names. You understand? So maybe the DIA action was a hedge of a short, but then what was Netflix? What was Amazon? What was Square? What was CRM? And there was a plethora of other names too that got lifted. So that's the way I look at it. One order, one name can mean anything. I'm looking for the patterns of activity. And once you start to see the aggressive buying flip from one side to the other, and it's usually obvious when it does. If you want to be early, you tail that DIA action and you take a trade. What's the worst that's going to happen? You lose money? You can lose money on any other trade, right? So a lot of people like to jump the shark, and if sentiment is on our side, you take a flyer with DIA. That's what I do. That's the problem I think, Vince, people run into. They're afraid to lose money. They're so scared of losing money. But you can lose money in the most bullish market out there. You know what I mean? And it goes to show you, like me, I'm more afraid of swinging up here than I am down here. I'm more afraid, right? You guys remember the webinars we used to do? And you guys used to ask me about Baba and Netflix. And I used to have the same response over and over. Guys, I don't know what to tell you. I can't swing Netflix up here. Maybe it continues higher. I can't, because this is coming. This is coming eventually. Right? Square. Remember Square? As Jack Dorsey selling 100,000 shares at a clip? Like, yes, Square looks great. Goes up every freaking day. But I can't get comfortable swinging up here. But just because, again, the psychology out there, people are more afraid to lose money on the long side down here than up there. We're actually, again, we're talking about individual names here, but market-wise, you're likely to find more success on the long side buying when sentiment's at your back down here than up here. So, and again, Vince, we talk about, continuously about the big money being made, right? Like where traders get big. Like throughout the course of my career, I've seen, traders or just players. I hate to even use the word trade. Just players in this game go from just your average player to, wow, they blew up in a good way. Every single one of them I know got big buying this shit. Not up here. I know a lot of players that blew themselves up buying highs. Every player that I've come across in my career You know who got into the next level? All got it from being bullish into blood. Just again, my point of view. I mean, for me, where I tell you guys this story all the time. My best years in this game came after the Nasdaq bubble blew up. It didn't come into 1999 during the Nasdaq bubble. When that Nasdaq bubble blew up from 2000 to like 2004, that's where I made all my money. That's why I made all my money. So that's why, again, it pays to just be involved and remaining focused to looking at the right things down here. Okay, it gets scarier. You know, you're gonna hear you got Kramer screaming, the end of the world. Everybody's bearish. 2000 and 2004 on the long side, Ani, on the long side. On the long side. And you know what was the major factor in that? Let me see. Oh, let me see if this will show it here. Hold on. You see this? Oh, this is the Russell. Where's this? What's the small cap index? Do we have a SML? Well, no. Yeah, but IWM, I'm talking about, it was even like micro cap. Small cap is small cap 600. It used to be SML. They don't have that anymore. Or maybe I got the wrong thing here. Hold on. Well, anyway, what happened was money came out of the tech bubble and there was a major rotation into small and micro cap names. I told you guys the story. There were SMID. Let me check that out. Maybe the symbol changed. Nah. SMID. How come I don't have it on here? Maybe everybody's symbol is different, right? Is this it? I just wanted to show you guys. What happened was there was a massive. Now, IWM is small cap, but it was even smaller. Let me see if I could see it on the IWM. I don't remember IWM, but it could have been. Looks like IWM was trending lower a little bit in then 2003, but it was something similar to this. The Nasdaq bubble blew up. IWC is micro. Maybe that'll show it. You know, this is a long time ago, so maybe the indices changed. Yeah, see, this probably was it. You're probably right, Samir, but the symbol changed. But make a long story short, what happened was the tech bubble blew up. All those hot Nasdaq high growth names, internet names got destroyed, and there was a major rotation into small caps. Major. And everybody continued to look at Cisco and all these names get destroyed, you know, wondering when they were going to come to a bottom. You can see here, look at this. This is Cisco. Look at that. And look how it's dead. Okay, so while everybody was looking at that, there was a major rotation into small cap and micro cap names. And if you were negged out and blindfolded, right, didn't know what was going on underneath the hood, you had no idea because you didn't see the rally in tech names. And to make a long story short, there were stocks, guys, I can't even. You guys love to play options, right? So you would appreciate this. I would buy a $4 stock, okay? And I was managing money at the time. So I would buy it for clients, a couple 100,000 shares and, you know, accumulate it, put it away. 2 months later, that stock would be 10. 2 months, 4 to 10. Okay, I get out of that, take my commission. I owned them as well too. I started off, I was buying like 10,000 shares of $4 or $5 stocks. Before you knew it, I'm buying 30 to 50,000 shares of a $5 stock. And these things were going. We used to tell clients, we got to give it 3 months. We're looking, it's a $5 stock, $8 to $10, 3 months. And these things were doubling in months, sometimes weeks. The easiest money I ever made came out of devastation. Devastation. And nobody wanted to even know what was going on. Do you know what I mean? People were so wrecked in the well-known tech names that I would be like, I would tell somebody, listen, you got to look at this USLB. It's a $3 stock. I just seen 3 names in that sector double over the last month. They're buying this thing, and nobody would care. Nobody had an interest. Nobody had an interest. But again, it's possible that can happen here. It's very possible. All right. In other words, you may get, the trades off the squeezes in Netflix, but maybe these things are dead for the time being. Maybe these things are dead. They've been hot enough, right? Then you got traders that they say, I don't trade anything else. Netflix, Apple, and Facebook. I don't even look at anything else. I hear that every day from traders. Every day. So that's one of the possibilities you have out of this market is a major rotation. And the only way you're going to be able to figure that out is if you're paying attention, to the flow and price action. But again, it all comes down to just not getting so negged out, thinking, it's some big systemic risk that's going to come out of it. If there is systemic risk that comes out of this, okay, we got a lot more important things to worry about than stocks. And I'm not trying to, soften the blow as far as losing money, but, being afraid of a loser is no different in any market. In any market. You always hear that saying, the market hates uncertainty. No, the market hates certainty. This market topped out on certainty, right? You were certain to get great earnings. The economy was certain to be great. It's uncertainty that made this market one of the longest bull markets we've had in our lifetime. It was all uncertainty. And by the way, you talk to people who've been, who were alive and had money to play in 2009. You don't think there was big money being made off the 2009? David Tepper bought the Carolina Panthers off freaking 2009. No shit. So you just got to keep our eyes open to this stuff. There you go. See, I ramble on. You guys got me all wrapped up into the market. And all right, so that's the moral of the whole story here. Anyway, you catch my drift. Okay, we are close enough sentiment-wise where you got to keep your eyes peeled. And I went into that rant. The point of the whole story was this is a little tough situation for me here because I feel like I'm ready. I want to position for this squeeze. I want to make a big dent, but at the same time, I got to be prudent about it because there could be weakness from here over the short term, and that's where the opportunity lies. So what I'm trying to get at, out of all that babbling, is if we do see further weakness from here, don't let it spook you. Okay, because the scarier it gets, just remember, the brighter the green is going to flash on these things. And the odds are for a monster squeeze when these things flash bright green. Monster. You know, monster. All right. We didn't even get into flow. We've been rambling for a while. We'll go quickly into flow. Anybody have any questions on what we spoke about here? I mean, did I miss anybody's questions? You guys are getting the point of what I was trying to get at out of what to look for next week. So the potential, there could be some weakness over the short term. Okay, but that's where you need to keep your eyes peeled. And for me, like Vince, and this is where flow becomes a huge edge for me. Okay, because let's say Monday, there's some selling. For me, I'm looking at sweeper activity. If I'm not seeing call sweeper activity come into that selling, I'll slow it down. You know what I mean? I'll slow it down a bit. Let the market come in. I know, right? I know going in already. I got my plan. There could be a little further weakness to the downside, right? These things aren't flashing green yet. We could get there. So if I don't see call sweeper activity, I'm gonna rein it in a little bit, nice and easy. If I do see sweeper activity attacking that red, then I got to get busy. That's where the sweeper activity becomes a big edge in my game. How quick do sentiment indicators change? It depends, right? Yeah, I mean, think about that question. Sentiment's a real thing. How quick do you change emotionally? You know? There's no way to figure that out. Like, for example, I'll show you guys one of the charts here. Hold on. Take this one, for example. Here, right? You had people bearish, then we got a little squeeze, alleviated some of that bearishness, right? Then some selling, bearish again, selling, bearish again. Then you had that big monster squeeze, right? So in this particular instance, here we are now, by the way. And here we were, I was telling you, Thursday into the lows. That was Thursday. Oh, Wednesday, I'm sorry. Wednesday into the lows of the afternoon. That was Wednesday. So I can give you the answer of the most recent. Like, look at that right there, Andrew, right? Think about that. All this here, prior to that, sentiment wasn't as bullish as it was at the top. Do you guys realize, okay, as much as this may be off at time to time, do you realize this was the top of that rally? It was literally right here. Market looked like it was going to bust right through it, right? That's where people say, oh, sentiment's extreme bullish. This market looks like it's going higher right now. You ignore sentiment, whoop, right? You buy into extreme bullish sentiment, thinking there's more, whoop. So there's the answer to your question of this recent rally, Andrew. Let me erase that. Basically, they went from as bearish as they can be to as bullish as they can be. All right. And this, this here, again, this here, I'll give you another example just to get an idea. These lows, right? Bink, bink. Short-term sentiment was flashing green. Okay? Intermediate-term sentiment wasn't there yet. So short-term sentiment was flashy green. You got a squeeze, definitely a profitable squeeze. This didn't get to as far as that got to, right? Sell signal, and then rolled over and new lows, and then it got to back here again. So that's why, in my opinion, from here, these lows again, could it break through a little bit? Possible. I think these things hold up. I really do. You know, could there be a flash crash day where this thing goes like that? That would probably be the end of it, in my opinion. You know, and then you'd get that big squeeze. So that's why I think into selling, I know I am. We got to lean bullish here. We got to lean bullish. All right, but that's a good question, Andrew. Again, that's why I can't, that's why I look at actual readings of sentiment to get an idea, because everybody's different. And it's when, again, sentiment is an edge when it's at an extreme. A lot of times players like to try to find signals in the in-between. Okay? When sentiment's neutral, it's neutral. It's not telling you anything. There's no edge there out of sentiment. Okay, sentiment's an edge at the extremes. That tells you when everybody is on one side or the other. All right, and again, from my experience, let's say we get in here, the longer this stays in there, the bigger the squeeze to follow. The bigger the squeeze to follow. So the way I play it, like, you get an idea. Like, for example, when this comes here, that's where I want to start. I'm already prepared, but I want to start doing I'm looking to buy something here. Okay. Let's say, the market doesn't rally much and then falls again in extreme and sentiment goes a little bit lower. That's where I'm looking to add and looking for something else. And the longer this stays here, the likelihood is the bigger the squeeze in the market to follow. Because again, think of it logically, more shorts, right? More sellers, and when it flips, you got more people covering, more people chasing, stuff like that. But if you guys follow flow, I think it's a huge plus on the timing, because like I said, Monday, the market could be down, and if we don't see sweeper activity, that's telling me that the likelihood is there still could be some more downside. But if I see sweeper activity, if we come in Monday and we're down 30, 40 handles and somebody comes in sweeping the board, I'm ready to go. That's where the sweeper activity helps out on the timing more than anything else. All right, so some good questions though. All right, so basically, I just went over the game plan, right? We went over the game plan. I think you guys got the gist of what I was trying to imply there. Let's go to some flow. All right, this is some of the action that caught my eye. Some of the stuff I played on Friday, day trade and all that jazz. I didn't do too much last week on the swing side. Thursday was my best day trading. That's where I pretty much made all the money for the week. Friday, I had an okay day. Prior to that, I didn't do much of anything but entertain myself. Some small losses, scratch-wise, small gains, nonsense. My swing, I got lucky. A couple of you played it with me. I played that PCG. I played March calls. Anybody play that PCG? See, and hopefully we start to see, even if this market's awful, hopefully we start to see more of this type of activity. And what I mean by that, story related. In other words, it's not a bet on the market. It's a bet on the name or maybe something that player has up their sleeve. So to make a long story short, oh, Maria, I thought you definitely had it. Edward, you played it? Oh, DK PC, nice. Yeah, I had the March calls and a small little piece of Jan's, but tiny. I took as a flyer. Very nice, very nice. So, yeah, several of us had it. So here was the story on PCG. A couple of guys in the room were looking at it, all right, into the weakness. Caught some leap buying out, way out. Saw some block activity, stuff like that. So we said, listen, if they come in and they sweep this thing hard, it's worth a shot. Okay, this is because, in my opinion, this is what options were made for. Like, for me, I couldn't get myself. I know, DK, you mentioned you bought the common. I give you, you got a pair of coconuts. I couldn't get myself to buy the equity here. I just couldn't do it with the news around it. So this was, okay. So this was in my opinion, blueprint for a play on the option side. Okay, you put in what you're willing to lose. If you really want to make a bet on a turnaround, you would need some time. I was kind of up in the air. That's why I had a bigger position in the March and kind of like a Jan Lotto. But I wanted to have some time thinking maybe I'd look for the bigger move. And then it caught the news after hours. So we came in the next day. A lot of us took it. I left a small runner of the March calls, but it was a nice hit. All right. But again, this is not a bet on the indices, right? It's not a bet on any of that. It's not a play on the sector. This was basically a news related play. And I'm hoping we see more of that because then you don't really have to worry about the market per se. You know what I mean? We haven't been seeing any of that. So that was my only swing last week. The only other thing that's fairly new, PayPal, I bought some Febs. I was thinking maybe add, but I don't even know. I'm trying to wait and see if there's a different group at play. That's what I'm trying to wait and see. I don't want to just buy the same old names again, but if we get, the sentiment line up, I'm going to play anything with decent action. All right, but that was my week. Nothing really too crazy. Here's some of the action. DHI, I wasn't too crazy about some of this action. I don't like the cheap calls, but they were aggressive. And if you look, a lot of the home builders had that shake and bake to new lows and turnaround. I had a position in home builders and I don't have any exposure now, which I'm kind of pissed at. I had Lennar. I sold it. I had this move here. I took profits. I had Beezer. I went further out on the Beezer. There was a risk reversal. I got lucky on that pop. So I sold that. And I wanted to tuck away a home builder. I don't have anything right now. So the home builders, acting a little different. This MTH caught flow into the lows, nice rally, and holding up. I wouldn't chase them, though. I wouldn't definitely not chase them. But look into weakness. Keep an eye on them if you're interested into weakness. LVS has been some nice action. Both LVS and Win. LVS has been their recent play. And it looks a little interesting here. Basically, LVS, they were buying all week. So you had a 9er low here, big squeeze, pretty much gave it all back. And then we started to see them buy. The flow started to look a little different, right? It wasn't just one LVS buyer. It was steady flow throughout the day, Friday, Thursday, Tuesday, and, starting to lift a little bit here. So, again, keep an eye on this, especially into weakness. Okay, if you're not in it yet, if you see this thing down and you see them attacking that would be your sign of an entry if you're interested. If you're not interested, then wait for something you're interested in. But LVS win saw some flow last week. Same thing. Trying to find a bottom here. MLCO they bought quite a few casinos. They all look identical. I mean, LVS and Win, if they're buying them all, you're better off with those two. You got MGM. I hate that stock. It's just choppy and slow. So LVS Win are the two main guys you should look at there. All right. Here's the action. My favorite line was the March line on Friday. So you can look at that into weakness. They have been buying Jans and some other stuff. Anybody like the casinos? Yeah, DK, it's out of control how cheap these things got. That's why the smart money, they got to start putting money to work here. But yeah, maybe something's cooking. Maybe there's some M&A news in the group. Yeah, seasonality could be. Oh, I'm in SGMS Leaps Max. That stock is, you can't get much worse. But again, we have the time, so that's why we have the time. Maria's saying she likes to win, but hasn't started position yet. Yeah, I would, again, there's no reason to chase, guys. No reason to chase. I mean, this market intraday, LVS was down on Thursday and then went green, So there was flow while the stock was down and then turned green. So I wouldn't chase. If you miss something, let it come down to you. It's even a stronger sign if they come back, because we've been seeing a ton of flow, what I call hit and run action. You see one sweep and you never see them again. You know how many names I put on my watch list where I saw one decent sweep? I was like, all right, if they come back and hit it, I'm going to buy it. And then I never see them again. So it pays to be patient until we see things start to act different. Confirmation of that. So let's see. So you got DHI, casinos, home builders, MDB. But here's the thing with MDB. This is a good looking order. They swept December 90s, 360 grand, which is a good, decent amount. Like I said, aggressive across multiple exchanges. I like the order. The only issue, one, it was up a lot. Okay. So that's one, has rallied here. And it looks like they are replacing a November position. Oh, and you have earnings. I didn't see that. How come I don't show earnings on here? Son of a gun. Thank you for telling me that, Gordon. So that makes me feel a little bit better because I like the order. December 11th. Okay. All right. But again, decent looking sweep. If anybody is interested in the name or looking to take a flyer on earnings, blah, blah, blah. It was a nice looking sweep. The main negative, though, like I said, it's replacing a November position. I'm almost positive. So it's not a clean bet. This one was interesting. EW. All right. The last time I seen sweeper activity that was half decent in this name. And those of you who know Ricky in the room, you can ask him about it. Was right here. You guys probably remember. They swept EW, then they came back the next day, swept some more, then came back again, swept some more, then swept some more. Like, what the hell's going on with this EW? Then we come in on a Monday, and this happened. Yeah, this is a decent name once you catch its flow. Now, like everything on Friday, there's a small chance it may roll some Novembers. But it was some decent action. All right, here's the order flow there. Where is it? Here, December 170s. And you see this? as it comes to spread, that looked like it was attached to a smaller November position that closed. So that's why that tells me it may roll a piece of a November position. Possible. All right. What else we got here? This has earnings. This sweeper came in 868 April 15th. Pretty aggressive order. And he was front running this block, which was a different line, April 16th. But they have earnings coming up. I looked at it. I remember this name in the past. There's been some activist chatter in this name. I don't know, was it Icon or somebody? Here's the earnings. November 19th. So you may want to watch it post earnings if you're interested. ALGN, no. Did it catch a sweep? Would it catch a small sweep? I'll take a peek at it. Once we get through this, I'll take a peek at some of your names you got out there. Here's a Chinese name, I'm told. BGNE. Not a bad looking order. Almost 200 grand. This name doesn't catch sweeper activity. Feb 155s. He lays some wood. BGNE. Anybody have any experience with this thing? I think it's a Chinese healthcare or pharmaceutical play. This is post earnings. That's good. And you can see trying to nail out a bottom after getting destroyed. And she looks like she can move. So I'm keeping it on my watch list. Chinese biotech, Jesus. And some Chinese names caught some flow with the G20 ahead and all. The casinos, Chinese plays, a lot of, trade war stuff. Baba had actually a pretty good looking June sweeper on, I think it was Wednesday. It was a big bet. What was it, Friday? Yeah, Wednesday. I think over here. Baba. So we'll see if these Chinese names can get going too. There's been some flow there. But again, you see this? They started to buy some stuff. That's a good sign. For those of you who aren't members, we haven't seen much of this. We see like a 250 lot of Tesla weeklies. They're just playing. No confidence. This name, CTSH. This is actually technically repeat action because it caught some action, I think it was the day before, maybe this day here, into the weakness. They had an investor day. I heard it went rather well. No, Baba was a deep in the money June sweeper, DK. Hold on. Baba could catch some size, but the order definitely caught my attention. Look at this. So June missile sweep, 335, June 85, 71 and change. And that opened a new position. So, if you make it a play on that, you're not tailing this order. You probably want to stick with the time frame. Make sure you have enough time because he's not. But you want to see that too. You want to see the spec action, but you want to see guys commit. You want to see the confidence where they commit. You'd like to see weekly or front month action around it, so there's a shot of it gaining some steam over the short term, some momentum there. But you want to see confidence behind these things because that's been lacking. I got to go back here. Anybody know this CTSH? Is this European or something? What is this? cybersecurity. I don't know what it is. Anyway, had a big, nice day on Friday. Manufactures and sells a range of sensors and electronic components. Aerospace defense. Yeah, so you had earnings. What? Oh, that's not it? Yeah, I could. Somebody was telling me it's European or something. Overseas? IT consulting. Oh, here we go. Maria's got it. IT services, digital technology. Yeah. It's like a censure. Okay. All right. Anyway, caught some aggressive activity again on Friday. They had an investor day. Buddy of mine told me went rather well, and that was the New Jersey. So maybe I guess they're American. I don't know where I got that. All right. So yeah, again, I wouldn't chase any bars like that. Let them come to you if you're interested. Unless you're in it already. Oop. I get lost here. All right, what else we got here? And you see, you guys know the top bet list. Usually I got one or two things here. There was a couple things to at least, like I said, put on a watch list. Baidu, I put this on here. I know a lot of you guys like to trade the name. Some spec action for next week. They were buying the November 23rd 195s. And you can see, not big money, okay, but it's aggressive activity. And maybe he has something up his sleeve, or maybe just making a play on China stuff. Yeah, these things look dirt cheap. But you can see here, swept multiple exchanges above the offer, took out all offers, took out all offers, took out all offers. You can see him chasing his own price, 58 cents, 64 cents, 64, 69 cents. There were a couple more of these things too. Half decent volume. I think it was around 3,000, 4,000 total he swept up. Well, again, it's not the dollar amounts, the aggressiveness behind it that caught my eye. And I know you guys, some of you were looking at the name or are interested in the name. All right, so that's the action there. Oops. Zio, this thing caught some crazy action. All right, so this, we don't know if the puts open, but I'm almost sure they do. He sells March 20 puts, okay, takes in 70 cents, and buys the March 27.5 calls. And then you could see was attacking March, different March, Jans, a lot of action in this Zio on Friday. And big action. Ooh. Now this thing has been destroyed. Look at that. This thing has been destroyed. This is what now? Telecommunications or something like that? Telecommunications services. Fiber bandwidth. I don't know, but somebody's out there buying it. Maybe, activists, shit like that. So definitely keep an eye on it. This type of action is, the Icons and the Paul Singers of the world, There's a 5G play? Jesus Christ. No, it doesn't look like it. Doesn't look like it. My God. I got beat up pretty good. Listen, if this big guy comes back Monday and hits it, I'm gonna play it. I'm gonna play it. Yeah, I gotta hold my nose and play it if he buys this. Again, just this type of action has been a dinosaur in this market. Has been a dinosaur. Several lines hit, put selling, risk reversals. We just haven't had a lot of it. Haven't had a lot of it. All right, so that was the action on Friday. A couple of names to keep an eye on. I'll get to some of your names now. Tesla, let's take a look. Tesla has had some decent flow, to tell you the truth. Tesla. Yeah, so Tesla, you had this red niner here, which was just an indication that it would at the least need to rest, get tired over here, but it doesn't look like too many sellers. All right, and now it's started a new count here. Okay, but that's what that was signaling, that this thing was likely to at least rest after a move like that. The only green niner you had was back here. But yeah, I mean, listen, for me, I have trouble buying off a move like this already. But, you know, I miss a lot of winners doing that. You know, because the way I look at it for swings, they get tougher up here. You know what I mean? It gets choppier up here, slows down up here. I remember there was a name that was catching here, Trip, I think it was. Wow, Trip had a big day here. Holy shit, Trip's at highs? I didn't even realize that. So I'm just giving you the example of Trip, but this was a different story. This was at highs. But Trip was still catching action, and you can see it was choppy, grinding. But then, you know, eventually they get tired and roll over. So Tesla is a little different story, though. That's not, you know, that's not new highs and all. That's still coming out of a long consolidation. There was one, yeah, there's been some decent looking sweeper activity in Tesla. There's been spec action, a lot of it. And there was one sweeper that was way out. I think it was August of next year. And it was a good looking sweep. Right around, I think it was right around when all the rest of them. Yeah, right? That's huge consolidation right here. Huge. Similar to this, DK, no? That looks like that last consolidation before that big rip. And it's definitely got some juice. Definitely got some juice. Grub. Haven't seen anything recent in Grub. Yeah, I still see these insider sells. They slowed down a little bit. But boy, those growth names, especially tech and so, these insiders, they're dumping like they got the plague. But Grub, no, I haven't seen anything notable in Grub. Haven't seen anything notable in Grub. We'll see if it catches some big action. You know, maybe tries to find a bottom here. And that's what I mean. You see, when I'm talking about like a decent squeeze, what we were talking about in sentiment, like we could, again, be in a longer term bearish trend, bear market into next year. Okay. But look how steep this thing is, right? I mean, you can't see this thing bottoming out and doing something like this. And then next year, back test the low. You know what I mean? I'm talking about even in the bearish case. This is a bearish case. I'm talking about a bearish case. You know, where it uptrend, lower highs eventually to like a downtrend line. You see it all the time. All these bear markets, very rarely you get that waterfall done. Usually that's the end of it when that happens. Bear markets, you have the rallies fail. So maybe that rally is coming up here. ALGN, I didn't see any. Did you see any, Gordon? I don't remember seeing. Oh, you're asking me. No. I didn't see any. I would definitely look for it down here. You know what I mean? This name, I remember, catches small sweeps. Nothing that big. You like that, Steven, right? I'm like, I said, I was like mad in the last webinar. Yeah, you got the left tackle here. You got the right guard here, right? We want to sweep it out to the halfback. Boom! Touchdown, Dallas. I'm a pro here. So yeah, similar setup, this ALGN. Again, this is, what a catastrophe. So maybe you get a bottom and, choppy, grindish rally somewhere. I think it's time. Yeah, keep an eye on it, Gordon. If I a lot of times it gets small. I remember this name, small sweeps in this uptrend. If they do hit it, I'll track you down. I'll remember it now that you mentioned it. I know the name. What other names you got? I know a couple of you guys were throwing them out there before. I didn't see them. Throw them out there again. Home Depot. Yeah, nothing really small action, nothing really appetizing. I haven't seen anything major. Lowe's is more known to catch some big action when they want it. Same thing. What? This Home Depot, I remember this thing just broke out to new highs here. Remember? It was holding up well and then had that rally. What the hell is this? My God. What damage, right? Yeah, this market has been saying, signaling something. Eventually, we're going to find it out, what exactly it's been saying all this time. And hopefully that'll be a short-term end to it. But, we joke around that this market's been factoring in a Great Depression from the summer. The casinos and the home builders and all this stuff. FDC, there was a buyer way out. I think it was April, something like that. That probably is already underwater. I think he was over here. But yeah, Max, it caught some action down here. I was amused, but I couldn't get myself to buy it because it was the only bullish order amongst a gazillion put sweepers. Here it is. April 20s. Now, the other thing is they were rolling out at the time some of their long-term positions they hit back in the day. But yeah, you got some action there. April's. I read an analyst note on this. Yeah, Steven, once they stop hitting the dips, well, it was like almost everything out there. An analyst saying that this thing is just way too cheap over here. Way too cheap. But there's a lot of names. I think, Max, this is something you want to look at on weekdays. And I don't know if you're for a trade or something you want to tuck away. If you're looking to tuck away, I can't blame you starting to nibble here. Otherwise, keep an eye on just the overall action. And, if we're sensing a squeeze, you don't even need to see any further action in it. But yeah, this is quite the beating. I'll tell you though, the last time it got hit, I don't think it was like this though. Because this thing got beat up over here too. More like chop, but it was a downtrend. Because I remember sweepers coming into this thing and they were early, and then it caught the bigger action and took off. This is interesting though. You got common. Yeah. So keep an eye on it. We know they play it, right? We know Mr. Cooperman. I'm sure he likes it down here. So I'm sure we're going to see Cooperman sweepers. Yeah, Ed, GE is a menagerie. You know what it is? Right now, you see some of these long-term puts on these things, $5. I think somebody was buying, I think they were $3 puts, something ridiculous like that. Now, you're saying sometimes we see some call sweepers. That's the problem. I'm sure there's people trying to trade this thing. I'm sure there's shorts that are looking to protect against a squeeze. But this does not bode well. said and Steven can vouch for me, my prediction, and this was like at the beginning of the summer, I predicted that GE was going to be the Lehman Brothers of this cycle. The Lehman Brothers of this cycle. Now, the problem is, okay, as bearish as it looks, I can tell you from experience that they don't go straight down, So there's going to be a relief rally, and you're going to think, okay, GE found the bottom, and then you're going to look around again when the market's selling off, and you're going to be like, oh my God, GE new lows? Like, look, let me see, DB. Look at that. Okay? This is what it reminds me of. Deutsche Bank. Like, look at this. All right, and then we're buying Armageddon puts with time in this. And then, you get these relief rallies. Like, look. So if you're looking on the short side or the put side, you got to wait for that. You got to wait for that. If you're asking about the opposite, if you're talking about trying to catch that, good luck. Yeah, I don't. This is not my cup of tea anymore. It's too messy. And when the street sniffs out blood, you know what I mean? When the street sniffs out blood, a lot of times it's game over. Game over. Yeah, like DK saying, you won't even recognize the company best case scenario. So tough cookie here. What are the names? Any other names? I'm trying to think off the top of my head. Any other names? You got some. The banks caught a little bit of action. Citigroup was probably the best of the action Friday. JP Morgan caught some flow Friday. Breather off a little 9 there. All right, if you're interested in the banks, again, I would buy only red there. I wouldn't dare buy green. But they're starting to see a little bit of flow. What are the names? I'm trying to think of other names. Facebook, yeah, Facebook is tough. There's been some Facebook flow. You got a Niner there, by the way. Oh, yeah, here it is, Niner. So I think, Sim, on the Facebook, I think with all these names, you can, like, if you see some decent sweeper activity, you can take a shot on a trade. But if you're looking like to make a bet on Facebook for like the official bottom turnaround play, you want to see missiles in a name like this. You want to see all out missiles. If Zio can catch an action like that finally, right? If a name like Zio, a name like Facebook should, when they really want it. Okay, but the problem is waiting around for that. You get these little bear market rallies in the name, right? That you're kicking yourself if you didn't trade it. So that's how I would approach Facebook here. You got a Niner. Monday you see some sweeper activity into red. You can take a shot. And, play for, here's your examples. Maybe you get a little more. You could get a little more if we get the market squeeze with it. But look, we just had a market squeeze that was powerful, and this thing went nowhere. Yeah, quick bounces I would play for the most part, unless you see some ridiculous action. That goes for all those names. All these names. Like even Netflix, okay? I give an example, Sim. The day we saw flow open up, we saw Netflix part of the sweeper activity. And it was a decent sweep. It was a decent order. Hey, no missile, but it was decent. And so in other words, you would play for this. You'd rather be earlier on the sell side than later taking profits. Maybe you want to roll just in case there's extra right? A bigger rally at stake. But that's the plan, in my opinion, would be to play for that. You know, you're playing like these. See, my opinion now, unless we see that special action, these are the names you're playing because they're liquid and they can move over the short term. Okay. Unless they see that missile activity, you're looking for new leadership to emerge, new names. You understand? A lot of times, what corrections like this, like we're seeing right now, okay, or bear markets, they happen because new leadership is going to emerge from it. You know, could be, you know, I don't know, commodity names, could be small cap names, could be, God only knows. If I knew the answer to that, I wouldn't be talking to you right now. Biotech, could be anything. But usually, from my experience, when you get this type of market cycle, there's new leadership. Like I told you, when the tech bubble bursted in 2000, small caps were the leaders. You know, small caps was the place to be. So we'll see. We'll see. I guess too early. It's too early to tell that. What we're going to see is we're going to see a squeeze where everything squeezes. And then what you're going to start to see is outperformance. On the down days, Facebook, Netflix will be down, but the leaders, the new leaders, will be holding up better. You know, will be outperforming. So those are the signs to look for. On the down days, who's catching the flow? On the down days, whose price action is impressive? Not on the up days. The up days, you're going to get a squeeze, you know, usually in everything, some stronger than others. The niner is an exhaustion signal. A niner is exhaustion. So basically, look for buyers to get tired here, look for buyers to get tired here, look for buyers to get tired here. And a lot of times we'll line up with sentiment because it's coming off a move. And that's where riffraff get bullish, you know, and on the flip side get bearish. We haven't had a green niner on SPY since here, June. We're not even close. We're on a new count, 1. We almost got there here, 6. Here, almost. So these are time zones. That's just giving you a heads up where you should start looking. Purple, start looking for signs of longs, and red, get ready to take some profits. What the hell? I had one more thing to tell you guys before. TRXC. There used to be action in this name nonstop. I haven't seen any. Had a nice niner there at the bottom. Not much of a rally off it. Oh, yeah. The mark. Trading View. So mine, a buddy of mine did mine for me because I don't know what the hell I'm doing. But if you go to Trading View, there's a gazillion of them. And you could just, you know, which one you like the best. This one's kind of customary. I think I don't know if it's my count or the zone. One of them is you got to pay for, but obviously I'm not paying that sucker. I know him. But you can find a million of them on there. A million. All right. See, like Bitcoin. Bitcoin. Who's buying Bitcoin? Steven. I know you're buying Bitcoin. Where are you? You buying Bitcoin or what? You got a niner. If you don't buy the Bitcoin here, you can't ever buy it. Will you get your live stream? Oh, what's up, C-Train? A live stream working on iPhone. Yeah, they've been attempting that for a while. Did you talk to Zitch in the room? Zitch can't help you out there? I think he's working on it too. Oh, you degenerate, Steven. Let's see. Seriously, I'm just curious now on this Bitcoin. It doesn't take much to talk you into it. Where was the last time it caught a nine? Here, see? Found the bottom. You gotta see if the lows hold up, I guess. Here was a niner. Nice rally. Niner, not a little bit of a rally. Niner, big rally. I'm not touching Bitcoin, but I've been following niners there and they've been efficient. GBTC. Oh, whatever happened to that GBTC? Is that still alive? Isn't that the ETF or the stock for it? Is that still in one piece? Oy, oy, oy. Jesus. And you can buy the futures now, right? XBT. Yeah, there's your niner. Yeah. What a beating, huh? I don't want to say I hate seeing people get blown up, but yeah, you had a crowd there that it doesn't take much to get amused off of. Yeah, talk to Zich. Zich has been helping me out with a lot of stuff on the tech side. You know me, C-Train. I can't figure. I'm lucky I turned my computer on and not have an issue. But Zich, I know Zich. A lot of people have been asking him about it, so he's working on it. And if anybody can figure it out, it would be Zich. DK saying pot stocks might be the next bubble. I wouldn't doubt that one bit. I wouldn't doubt that one bit. These are Canadian too, aren't they? They're not even American. Look at this thing. Oh, give me a break, right? This thing looks like a bubble if I ever seen one. Unfi. Let's see. Why do I know this name Unfi? Yeah, it didn't catch any flow, did it? Andrew? I think it might have caught flow once upon a time. That's where I know the name Foods. Now, I haven't seen any flow in it. You almost had a niner there. Wow. So many stocks like this, Andrew. You know? So many stocks like this. And you know what the problem is? When you see charts like this, you're like, yeah, something's going on. This is not good. But so many stocks look like this. You know, when you see stocks like this, you're like, oh, they may be accounting irregularities. They're going out of business. But there are so many. Like, this thing has been in a bear market from the start of the year, this UNFI. And this is a food stock, which is supposed to hang in there in these times. Yeah, Vince, that's what a lot of people are saying. These Canadian names are done for. You know, listen, they're not going to make it easy on the put side, and they're going to rob you on premium. But that's the side to play, no doubt. Into rallies, no doubt. You know, when you see this type of stuff, yeah, we've been seeing some defensive names outperform and see some flow. But here's the problem, Gordon. You see what this PG looks like? And if the market squeezes, the air may come out of these. Now, that would be the spot where you would look to get in them. But you got to be careful up here now. You know, you got to be careful up here now. Oh, you're in them already, yeah. So, you know, so in other words, like if the market sustains a little move here for a couple months, you might have these things pull back and chop around. And if you're interested in getting long of them, that's where you would look to buy these things. You know, but this whole group has been hot, the staples and all. How'd that CL do? I missed that boat. Been stuck here. Had a 9 there too. Yeah. Overall, it caught some action, the CL here. That's why I was asking. I was contemplating. J&J, that's been strong, right? Yeah, look at that. Look at that. But now, in my opinion, these are late here to buy. You know, there may be some more upside, but you want to buy them on pullbacks. Yeah, Amazon is in XLP. Yep. See, this is a perfect squeeze name. You guys like to play the calls on this. You know, if we get that sentiment squeeze, like this is all you want, and you probably even see more than that. But again, you know, beyond that, look, you know what I mean? Look, now this could be just a correction in a sense, but that tale still hasn't been told yet. Still hasn't been told. Like I remember in 1998, there was the tech names were even hotter, the semi names, and they had a vicious correction, chopped in half, and everybody was talking about game over, they're done, blah blah blah. And 1999, you know what happened. Okay, so yeah, you want to keep an open mind about it. But these things have been rallying for a long time now. A long time. Yeah, 98 was vicious. 98 was vicious. Now, I remember the semiconductors were the hot spot then, chopped in half, every single one of them. What about these semis? Nobody looking at them? I mean, the news, let me tell you something. These semis, right now, the news is as bearish as you're going to get. Especially off the NVIDIA Friday. Like, yeah, that was the one thing they were holding out hope for. NVIDIA to pull them out. Because everything else they've been destroying forever now. How long has this sell-off been going on in semis? All year, right? March. Look at LRCX. That was the first one to go south. Whoop. But I'll leave you on this note. I got a 20-plus year career, right? Every single cycle, the semiconductors have come out of blood only to go to new highs and then some. Every single one. Not every single one. You know what I mean, the leaders. You want to see a semiconductor doing the opposite? Look at Xilinx. Huh. Yeah, I know. That's what I'm saying. All the semis, the news, eventually is going to be all factored in there, in my opinion. In other words, the news is going to continue to look awful, you know, but eventually you reach a point where we all know already, right? We all know the semis are a disaster. Their fundamentals are a disaster. And that's usually when these things find a bottom, right? Because look, when this thing started, I'm taking LRCX because it was a beast. When this thing started to not act right, the news was still good in these things, and nobody can figure it out. Now, you know, the news is out there for everybody. SOXL, Steven just gave us a degenerate ETF. I got to add that to the screen. All right, boys and girls, always a pleasure. Again, any weakness, you know, especially early next week, put the bull hats on, look for some for some flow into the weakness. That's the opportunity. And then we light a candle and pray for the mother of all squeezes and death to all bears. I'll talk to you guys next week. Enjoy your weekend.